Hello, everyone, and welcome to our new podcast session at Meza. And I'm delighted to announce our first guest. He's a prominent figure and a great voice in the fine wine industry, talking about narratives that have been false about the fine wines and asset class and just bring clarity on the asset class itself. I'm honored to have Gertjan Verdickt as our first guest. Thank you so much, Gertjan, for joining us.
Thank you for having me.
It's honestly an honor to talk to you, and I'm a big fan.
Thank you for having me.
No problem, Gertjan. Before we get into the weeds, Gertjan, can we talk about what inspired you to write about wine investment funds specifically? What got you into this industry, and just talking about fine wines and asset class?
So how I got into fine wine as an asset is purely out of the interest of wine itself. So as a consumption good, I love wine.
Yeah.
I like wine, find it very intriguing. And on a more professional side, I did a PhD that focused on why stock prices moved over time. So I was always interested in like predictability, understanding financial market behavior. And I was doing WSET, and in level 4 you had to write a research paper. So I started thinking, okay, well, what can I do my paper on? I didn't know at the time it was a fixed topic, but I was already thinking, okay, so I find stocks interesting, I find this wine interesting, like how can I combine the two? So that's why I started exploring this entire world of like auctions, fine wine investing, then LiveX as an exchange, and all of these things came together. I started building this huge data set on wine prices. I think I have over 6 million observations literally across the world. For instance, from South Africa too, Stefan Waltz, the auction house, I have a lot of data on. And I just started to understand and trying to explore like, why do these prices actually move over time? So that's how I got into this field of fine wine investing.
Okay, that's actually really beautiful to hear, Gertjan. As fine wine is not a mainstream asset, especially here in South Africa, so it's pretty good to see prominent voices like you actually talking about the narratives out there and actually using real data to actually tell us what fine wine actually is. And
Yes.
I also want to ask you, I want us to start off simple. Why do so many people think fine wine is a low stable asset?
Well, so it depends a bit what people actually mean by low risk stable assets. So the way how I as a lecturer define what low risk is, that is about return and return volatility basically. So return are just price changes over time. Now, why people and especially bad actors in the industry say that wine is a very low risk asset because it has a very low volatility. But nobody really asks the question like, why does wine have a very low volatility? Well, because it doesn't trade very often. So if you look at the type of research I'm doing, so I look at auctions. So in South Africa, for instance, you have an auction maybe once a month, maybe once every 3 months. So if you want to sell your wine, well, you have to wait a very long. So if you compare it to the more traditional assets like stocks, well, you can sell your stock every single second when the market is open. Doesn't mean there's going to be a buyer, but at least you have the opportunity to do so. If you want to do this in the wine sphere, I'm not saying you have to go through auctions, but if you are, well, it's going to take you some time. Now, if you go to a more high frequency alternative, we talked about LiveX, so which is an exchange in the UK that trades a lot of wine. Even there, you will see that, sure, maybe the 5 Premier Crus from Bordeaux, Margot Latour and so on, maybe they will trade once a day, but I think that's about it. There aren't that many wines who are very liquid. So if you then say, well, hey, I'm just going to do exactly the same what I did for stocks. I'm just going to calculate price changes. Hey, the price doesn't change much. I'm going to take the standard deviation of that. Wow, that's near zero. It means wine will be a very low risk asset, very stable. Whereas in reality, it's like, well, no, the volatility is hidden. So it doesn't trade very often, and that's why people say it's very low risk, but in reality, it's not at all.
So wine is illiquid, so price changes aren't visible daily, so that creates an illusion that it's stable pretty much. So,
exactly.
Yeah, okay. Makes a lot of sense, Gertjan. But to a follow-up question to that, so do you think this perception is deliberate, crafted by the industry, or just misunderstood?
So there are two things. Is it deliberate? Well, it's a question like who gives you that information. So if we want to make it very specific to the people who are listening. So I'm currently a lecturer in New Zealand. So you have a very famous wine from the South Island, which is Felton Road. So if you go onto LiveX, you see that Felton Road has an amazing return. Especially in 2020, you had a return above 100%. You think, wow, this is amazing. My money doubled. The issue is you buy that wine. Buying is very easy. You try to sell. Selling is very hard. Why? Because nobody's asking for this specific wine. There's one player who bought it double what the price actually was, and then you're unable to sell. So that's what we call an illiquidity premium. You get compensation for the fact that something is very illiquid. Now, to answer your question, is it deliberate? Well, if I'm a wine investment fund, I can tell to my investors like, hey, I got his asset. Very low return, perfect diversifier. This is actually what you should invest in. So then it's actually being considered as a feature, whereas in reality, this low volatility, this low risk is a bug in the system. Because in reality, the returns or the volatility I'm presenting to you will not materialize, especially on a longer horizon. So I think to answer your question, well, if you want to be a bad actor, you can make it very deliberate that this is low risk, whereas in reality, it's not at all.
It's not. Okay, Dr. Gertjan. So you call out something big in your article, your paper, volatility laundering. How exactly are wine funds making wine look safer than it is?
Well, it's just what I said. Yeah. So what people love to do is say, okay, so you're an investor. Okay, what does your portfolio look like? Most people have either stocks or bonds in their portfolio. Okay, those things trade literally every day. Maybe bonds do not trade every day, but at least they trade multiple times a week. Okay, that's fine. What I'm going to do is everything I did for stocks and bonds, I'm going to do diversification. But in order to do diversification, meaning I'm going to lower the risk of my entire portfolio, I need to know what weight do I put into stocks, so how much money do I put into stocks, which weight of my portfolio is going to be bonds, and how much money I'm going to put into. In order to calculate what the optimal weights are, I need to know two things, risk and return. Now, wine, as we just spoke about, has a very low return. Why? It just doesn't trade. So people will make it seem like, hey, you should invest a lot of your capital into wine because it's a very diversified asset. Why? Because very high returns, very low risk. So volatility laundering is making it seem like, hey, this is a perfect diversifying asset, whereas in reality, it's not the case at all.
It's not the case at all. So it's not that volatility is in there, it's just not visible. And people are just masking everything and just false advertising.
Exactly. So it's a bit of the same as what private equity, real estate is as well. So if you want to sell your house, you can't sell your house tomorrow. You have to go through an entire process. So that's something you have to take into account. So the volatility is laundered and make it seem like very rosy, whereas in reality it's not the case.
It's not. Okay, so Gertjan, in your research, how different are the real returns from the ones most funds advertise?
So that it's a very hard question to answer, and the reason is that, as everybody knows who's listening to this podcast and who's thinking about wine, at the end of the day, it's also a consumption asset. It's a consumption. It is. People love to drink wine. So it's a very hard question to actually address, like what is investment wine and what is consumption wine. Now, what I have done in my research is saying, okay, if a specific bottle trades X amount of times, so for instance, over a period of, let's say, 10 years, if it trades at least 30 times, it is considered an investment grade wine. Why is this important? Because the raw returns is about 8.5% per year. If you include every wine that is available on auction, the return on wine is 0%. But this is both consumption wine and investment grade wine. If you increase that number to 30, for instance, you go from an 8.5% raw return to an adjusted return of about 4 to 5%. So the more restrictive you are, or the higher liquidity you want, the higher that return is and the smaller that difference is between raw and adjusted return. However, if you actually go to the extreme and look at the things that are very liquid, that difference is still a 2% difference per year. That is large, because if we again take the more traditional side, if I'm a stock asset manager and I'm telling you, hey, I got this amazing portfolio, but I'm going to charge you 2% for it, you're going to say, oh, that's a very large compensation you want from me. But it's a bit of the same with wine. So wine, I would say a very realistic return for investment grade wine should be around 6.5%. So it's very nice, very good, but a bit lower than what you would get in traditional stocks.
No, thank you so much, Gertjan, for that. Because when I got into the wine industry and I started to learn about it as an asset class, you get so many narratives being pushed to you and so many false data pushed around fine wine, especially around returns and its benefits. So it's really hard to discern what is real and what is not, since they also do use outdated data, where they push this narrative that fine wine has been making this much return, but you actually see that that's only for a certain period of time, not the whole period. So what should investors really look for in wine fund reporting to avoid being misled?
So two things. What I look at is first, again, to the definition of what is investment grade wine. So the universe that I personally look at is 150 producers.
Okay.
So I'm not talking about bottles, I'm talking really about producers. So what do I mean by producers? I mean Chateau Margaux, Chateau Latour, Lafite Rothschild, Mouton Rothschild, those type of producers. How do I get to 150? Well, I just go to LiveX and I see like, okay, who are the producers in their 50, 100, 1000 most liquid wines. And then I go to all these regional indices and I also have a look like, okay, what is being traded there? And there I see like of these 150 producers, about 10 vintages of those are really somewhat actively traded. Again, relatively speaking, in the wine sphere. So that is something I look at. And if I'm completely honest, I love South African wine, but South Africa is not included in that. Why? Because the fine investment market is France dominated. So the majority is like the DRCs, the Bordeaux's of this world. There is some US, Opus 1, Screaming Eagle. There is only 2 real Australian wines, the Penfold, the Henschke, the Hill of Grace, for instance. There's no New Zealand. Spain, you have Pingus, but that's where the buck stops. You have some Italy, no Germany. So that is the first thing I would look at is like, if you look at what people are actually the fine wine market is very small. It's very concentrated. Yeah. That's the first thing. The second thing I always look at, and Wine5, for instance, does that brilliantly, is I want to know in a specific month how many wine prices increased, decreased, but stayed exactly the same. And I think this third category is going to be very important. I want to know how many prices remained flat, meaning there is zero trading. Because that percentage is telling me how deep the market actually is. Because for stocks, I would say 50% go up, 50% go down, and about 0% stay the same. I'm making very generalization now, but my point is prices relatively move one way or the other. They don't stay the same. However, if we talk about wine, about half of wines stay exactly the same. Maybe it's a bit more, maybe it goes to 60, maybe it's 40, but it's about that range. So that is something I always look for. If I want to have an indicator of, okay, where is the market currently at, that is how many wines do not trade. Because if there's one thing that wine is very known for, as we talked about, is that illiquidity. So if I can add one more thing, a lot of these people say like, hey, wine, for instance, well, it's a perfect diversification against inflation. So it's an inflation hedge. I said, wow, do we really know? Because inflation numbers come out today and you will only see a huge reaction to wine maybe next month or the month after. It's always with a lag. So you don't really know if something is an inflation hedge because information gets slowly incorporated into prices.
That's very insightful, Gertjan. Can I ask you, what's one red flag you'd avoid personally as an investor if you'd see something in a wine fund? What's that one red flag you'd see and that you think that
if they talk about low volatility, if they talk about a very nice diversification, that is something that always like puts my antenna up, like, is it though? Yeah, so I'm not saying it's not true. The only thing is like diversification, so the correlation between wine and traditional markets, it fluctuates over time. So we have seen it being positive, we have seen it being negative. On average, it's around zero. So that is something I want to see. So if somebody tries to convey me and say like, hey, I got this amazing fund, I want to know, okay, how do you calculate returns? What do you see? What do you use? What type of information do you have that I don't have? What am I missing?
Yeah, okay. No, that makes total sense, Jan. Since there are so many voices out there. So it's really good for people to know which red flags to look out for. Since many people, I think that's the difference between fine wine and traditional asset classes. There's so much information out there on stocks that you know what isn't real and what is. And in fine wine, we do need people to know what to look out for from these wine funds because there's a lot of them popping up like recently in lately. So for someone considering fine wine as a part of their portfolio, Gertjan, from your research, what are the real benefits when done right from your research and what you've observed?
So as I mentioned, it gives a return. It gives a nice return. It's like the 6% I was referring to, that's on average. So I think there are huge benefits to this market. And one of the reasons is something you point out is that information is it's a very opaque market. So information is scarce. Yeah. So if you want to do your research, there's real alpha to be made. So there's real return to be generated.
Yeah.
So there is a lot of potential out there. So this is something, so I also do a little bit of financial history. So if we look at stock markets in, say, the 19th century in continental Europe, it's a bit of a similar situation. So people with more information are able to outperform. I think wine has the same type of features. Like if you have more information, you're willing to do the work, you're able to generate some nice returns. So the one thing I would say is like, do your research. Like look at the relationship, for instance, between price and return. Look at the relationship between rating and return. Something we've noticed is that there's reversal patterns in wine, meaning if it's going up next month, it's a higher likelihood that it goes down. So if you know all of these things, you can get a bit of a better insight into, okay, we can do some market timing, we can do maybe a better selection, but those things are very valuable. And I think that is something that research has shown. It is an opaque market, which means there is a lot of potential for people who are willing to do the work.
Yeah. So it's all about just doing your due diligence and putting your research down properly before you enter into any asset class. And that's true because with any asset class there is risk involved, and I do think it's on the investor to actually do the proper research to actually see what's going on and the history of the asset class itself. But to close it off, I just want to ask you one question. If you had to redesign wine investing from scratch, what would you change first?
Oof, that's a very, very good question. If I have to do it from scratch, I think what LiveX has done is very important, making prices very transparent. So that's something which is very good. I think the next innovation can come from fractional investing, meaning you have a bottle of wine, let's say a DRC. Dominé de Romanée Conti, which is about 25,000 euros. So if you want to have a diversified portfolio with limited budget, you're not going to pay 25,000 euros for one bottle. But what you can do is say, well, I'm going to have certificates of that bottle and I'm going to divide that bottle into 1,000, 10,000 certificates. So if you do 10,000 certificates, a certificate is 2.5 euros. So instead of making that bottle trade, you're trading those certificates. So you increase liquidity by the fact that you can trade these smaller portions. So you make your entire market way more accessible. So I think I would do LiveX, but I would look into this idea of fractional investing. We've seen it work for stocks. We've seen it work for art. I think the time is ripe to do this for wine, for whiskey, for other drinkables.
That's true, and I totally agree with that, Gertjan, because I do think the retail investor market are fed up with the products that they have, and I do think they want access to these asset classes that have been previously available for the wealthy few. And I do think there is space for retail investors to enter this market and to add it to their investment portfolios. But I do want to just say thank you so much for availing yourself and talking to me today, because I'm really appreciative of the work you're doing in the industry, as your voice is very prominent and you are educating everyone on the real benefits of fine wine. We do not want people to be duped or to think that to believe in one thing and then they find out that it doesn't exist about this asset class. So I truly want to say thank you so much for your work, Gertjan. Thank you so much for availing yourself for this conversation. Thank you so
Thank
much.
you for having me. And also thank you for spreading the word, because I've been following you on LinkedIn and you do an amazing job. So keep doing what you're doing.
So much, Gertjan. No problem. Thank you so much, Gertjan. Thank you, folks, for tuning in, and we'll see you next time with our next guest. Thank you so much.